and Swati, who will do the function analysis for GP1? Come on, jaldi. Who will do function analysis for GP1? Come on, it's very easy. GP1.
Contract manufacturer. So for functions, it must be maintaining the inventory.
It is manufacturing, because it is manufacturing. That is why it would have.
Manufacturing, yes.
Yeah, it is. Come to function. Entity sequentially. Entity GP1. Okay. Function. Contract manufacturing. So it has manufacturing facilities. Okay. It has got plant, setup, physical infrastructure. It would also need to store those finished goods. So a warehousing facility, because it sells to GPX. So therefore logistical, transportation. Fine. It is also making use of intellectual property. So exploitation of intellectual property. That is also a function of GP1. Yeah, Abdul, is it clear?
Yes, sir.
Fine. Move on to assets. Physical plant, setup, manufacturing facilities, transport, and then you have logistical infrastructure. Fine. Risk. What are the risks? Inventory risk. It is selling to independent customers as well, global customers. So inventory risk, market risk. It might have borrowed money, so credit risk is also involved. Fine. It is exploitation risk, because it might not be able to exploit the intellectual property that it is licensing from GP2, but then it has to pay the royalty. So that is a risk. Fine. Exploitation risk. Credit risk also, because it ultimately has to pay the money. So there's a risk involved. It might not be able to, money might not flow to GP1, but then ultimately it has to make the payment, because that's a previous transaction. So it's a credit risk. Right? So these are the functions and assets for GP1, and the function, asset and risk. And ultimately, how would you characterize this entity? What is the characteristic label attached to this entity? Abdul, what is the name that you would give to GP1?
So it is a contract manufacturer.
Perfect. It is a contract manufacturer. Because it is performing manufacturing operations, and then it is selling. Fine. But it is not toller, because it is also selling. It's a contract manufacturer. Fine. Clear. Is it clear to everyone? Deepak, Abdul, Swati, and Rajat?
Yes, sir.
Okay. So now third entity, GP2. Okay. Who will step in for GP2? Is it Swati? Is she there? Swati? Oh, your mic is not working. What happened? Okay. Deepak, you step in. Deepak, you perform function analysis for GP2. Come on. There's a problem with your mic.
So sir, GP2
Start. Sequentially. I need you to follow I am giving you structures, oral structures, everything. You need to follow this. Fine. Move this. Complete this table. Serial number 3. 1, 2, 3. Come on.
It is performing contract manufacturing function and also owner of IP.
It's a contract manufacturing. It is performing contract manufacturing operations. It is selling to sale functions. It is selling the finished goods to GPX. It is also selling. It is selling to GPH. Number 1. Number 2. It is also an IP owner. It's a legal entity that owns all the IP of the group. Fine. That is also one of the functions. Move ahead. In addition to that, come on. Move ahead.
So it is receiving royalty income from GP Hadco and GP Sub1.
Receiving.
Performing temporary functions.
Excellent point. Receiving royalty is not a function. That's a transaction.
It is transaction.
Yeah. GP receiving royalty, that is a transaction. Abdul, I'll come to you. As far as this IP entity is concerned, this is performing, because it is mentioned that it is the owner. So you can very reasonably say that it is performing IP management services. IP management services. Because it is the owner, so it might be performing those production infringement prosecution exercises. If it finds that any competitor is breaching, infringing upon its intellectual property, then it might be undertaking infringement proceedings. So IP management services. IP management services would be an appropriate name for the functions being performed by GP2. Fine. In addition to that, our DEMP functions, I would not say would reside here, because remember GPH is performing R&D functions. So DEMP functions in all probability are being performed by GPH. In fact, this is one point which we need to mention very clearly while we are taking the function analysis. That because R&D, we mentioned that it is performing R&D facilities, but then in the group you can also in the bracket you can also write that it is also performing DEMP functions. Because R&D is what? Development and enhancement of the IP. So DEMP functions would not be performed by GP2. They would be performed by GPH. Is it clear?
Yes, sir. So GP2 would only be
sir,
this is only the owner
GP2.
of the IP.
Yeah. Yes, Deepak, come on.
So, sir, GP2 holds ownership of IP. Can we also say that it may maintain IP if it holds IP?
You can make this reasonable. You can make this reasonable assumption, because you know what, TP questions are typically like this, that every bit of fact that you would require in answering the question, that would not be given to you. But then based upon the fact pattern which is given to you, you can make reasonable assumptions. And when you make assumptions, you are right. You mentioned clearly that because it is the legal owner, so it can reasonably be assumed that it would be performing IP management functions. But then don't write DEMP functions here. Why? Because R&D is being performed by GPH. So there you can write that based upon the fact pattern, it can be reasonably assumed that DEMP functions are being performed by GPH. And here you are performing the protection for services. You can write this. Clear?
Yes, sir.
Right? So this is the functions. Assets, contract manufacturing. It is also it's also manufacturing because it is selling. It's also manufacturing. So same inventory, same risk, same assets for manufacturing that were being used by GP1 and GPH. Then in addition to this, because it is also IP owner, so IP docket services, IP docket. There are certain softwares, there are certain specialized facilities which are required for IP management. So because it is the IP holding company, so that is why assets you can have IP docket facilities. You can have as an asset, and then ultimately risk same. Credit risk, market risk, manufacturing risk, inventory risk, sale risk, then infringement risk, because it is also legal IP owner, infringement risk. Then you can have credit risk, because it might not receive royalty from GP1 and GPH and even independent entity. So credit risk is definitely there. Exploitation risk, fine. So these are the different types of risk associated with GP2, and on the basis of this, what is the characteristic label that you attach? Deepak, how would you characterize it?
IP owner with contract manufacturing function.
Absolutely right. Because it is not just contract manufacturing. Yeah, please go ahead.
Yeah, because it has more IP function and it is only contract manufacturing on behalf of GP4, but receiving royalty from sub-1, independent and ADCO.
Absolutely. So it is performing. It's a dual entity. It has got dual nature. It is also a contract manufacturer, but in addition to that, it is also an IP holding company. It is also an IP company. Perfect. So if you do this much, you have completed the full function analysis of this entire group. Now, is this discussion clear to everyone? And how you proceed, structure 1.33, 1.36, and then you land up on the third paragraph. You have to write a story, a structured answer. Fine? And don't be in a panicky mode. Move slowly. 3 hours and 15 minutes is a very long time. Ample amount of time. And I've already told you that A section A and section B, 70 marks. You're already through. Fine. So on section A, that is 2 questions, you can safely devote what should I say, 1 hour 15 minutes. 1 hour 15 minutes to at least. You have ample amount of time. So move slowly, create a diagram, write everything, and because this is the discussion, that is why we are moving very slowly. If you would do this on your own, then you would be quite fast. Right? So creating this diagram would require a bit amount of time. You read the fact pattern, and once this diagram is there, then you will be very, very fast. You can type it. It depends upon you how fast you are in typing. So can we move on to the third portion of question number 1, third part?
Yes.
Okay. 3. Explain how you would select and apply TP methodologies to achieve an arm's length outcome applicable to the GP group. As part of your response, you should discuss any comparability issues. Now, TP method, and this is 12 marker. It doesn't matter. Explain how you would select and apply TP methodologies to achieve an arm's length outcome applicable to the GP group. How you would select. Understand the question, read the question, what it is demanding from you. Explain how you would select and apply TP methods to achieve an arm's length outcome. Fine, applicable. As part of your response, you should discuss any comparability issues. Fine. So how you would select and apply, and then third portion is you should discuss any comparability issues. So 3 parts of this one question. Okay, now if I am to answer this question, how would I proceed? Okay. Explain how you would select and apply TP methodologies. Remember chapter number 2, TP methodologies, and remember chapter number 2, paragraph number 2, paragraph that is 2.2. 2.2 was that paragraph which actually gave you set of 5 criteria that you can make use of while selecting the TP method, while selecting the appropriate TP method. And those 5 criteria, what are those 5 criteria? The 5 factors, the 5 criteria that you can make use of while selecting an appropriate TP method. Strengths and weaknesses of each of the TP methods, number 1. Number 2, appropriateness of the TP method. In the present case, depending upon the functional analysis that you would do. Appropriateness. Fine. 2. Number 3, reliability of the available information. Number 4, comparability, availability of comparables, comparability adjustment. And then number 5, the degree of adjustments. So those 5 factors, mention those 5 factors, that any TP method is selected based upon the 5 criteria which are mentioned by the OECD TP guidelines in paragraph number 2.2. Don't copy, but mention this in your own words. Fine. And either in the beginning of this paragraph or in the end of the paragraph, mention paragraph 2.2 OECD TPG 2022. Fine. First paragraph, introduction, taken care of. Come to second paragraph. How you would select and apply TP methodologies. Okay, how you would select. So you have told them how you would select. Fine. On the basis of these 5 factors, I will make a selection. Now come to the actual methods. How many methods? Cup, RPM, CPM, TNMM, PSM. Okay. Take each of those methods because it's a 12 marker question. It's a 12 marker question, and that is why you would be required to make you would be required to devote some amount of explanation for each of those 4 methods: cup, RPM, CPM, and then TNMM. PSM, clearly you can write one line, but PSM in this case you won't be, I mean, situations are not right for application of PSM. Start with cup, number 1 method, and you would do this for every one of those 5 methods. Start with cup. Mention what is cup. Comparable uncontrolled price method is a traditional transactional method. Comparable uncontrolled price method is a traditional transactional method that compares the price of the product transacted, transferred, or service performed between 2 associated entities with a comparable transaction between 2 independent entities. Fine. This is one method which makes use of product comparability, and the third comparability factor, that is product characteristics, are of utmost importance while employing cup. Meaning to say, cup relies on a very high degree of product comparability or service comparability between the associated entities, and that is in the controlled transaction and in the uncontrolled transaction between independent parties. Fine. Then you can also mention what cup is made use of in commodity transactions. You would remember cup would be made use. Cup is used in commodity transactions. Cup is also used in financial transactions. Last week we created every method, every financial transaction, intra-group loan, financial guarantees, or even your captive insurance. Every financial transaction that we saw was making use of cup. Right? So cup is used in case of your commodity trading as well as your financial transactions. This is the basic background of cup. Okay. Then in addition to this, remember that paragraph. An uncontrolled transaction will be comparable. An uncontrolled transaction will be comparable to a controlled transaction for the purposes of cup if 1 and 2, if none of the differences between the transactions being compared or between the enterprises undertaking those transactions materially affect the variable, and that variable is price, or if reasonably accurate adjustments can be made to eliminate those material effects. Very important paragraph, write that as well. Fine. With this, you have created the background for application of cup. What is cup? Where it is used? Commodities, product. Fine. What are the standards for the use of cup? Definition of cup: use, commodities, financial transactions. Standard for the use of cup: 1 and 2 conditions. And now you come to the question: which of the transactions that we have identified in part number 1 can be priced using cup? Application. Ab batao. Just tell me which of these transactions: contract manufacturing, selling, contract manufacturing, selling, license, royalty. Fine. License, royalty. 8 transactions that we had identified in step number 1. Upon which of the transactions can you apply cup? Come on. Anyone? Deepak, Swati and Abdul. Oh, Rajat, it will be difficult. Rajat, you just keep on listening to this. Come on, Deepak.
So for GP sub 2, it is receiving royalty from GP Headco, GP1 and independent company.
Okay.
So we can say that cup can be applied, internal cup is there.
Perfect. Great. See, what he is mentioning, Deepak is mentioning that GP2, because ultimately you require internal comparable or external comparable. Fine. And remember, they are also saying this independent entity here and this independent entity here and this independent customers here. They are deliberately given to you. They are given to you so that you can create internal comparables. And he is very correctly pointing out this fact that because GP2 is receiving royalty from independent party, so it means it has licensed the IP to independent party, it has licensed the IP to GPH and GP1. So this is a control transaction, this is a control transaction, right? Control transaction for license, and uncontrolled transaction. And because same entity is present here, that is why this becomes an internal comparable. So you know the value of the royalty here because this is an uncontrolled transaction. You can make use of this comparable, internal comparable, and you can make and you can use it for pricing of this transaction royalty as well as this. So you can make use of cup for pricing the royalty payment between GPH to GPH2 as well as GP1 to GP2. Excellent. Excellent. Great. So this is, you can make use of cup here. Fine. One use of cup. Payment of royalty. Royalty payment. Royalty from GP2 to GP1 as well as GPH. And internal comparable. Great. Any further use? Any further use of cup?
Sir, similar would be in the case of GP1 selling products to GPH and also to global customers.
Excellent. Perfect. Because cup requires product comparability. And you find that same product is being sold by GP1 to independent parties as well as to GPH. Right? So this is also internal comparable. Use this transaction, the price of this transaction for pricing this transaction. Excellent. So you can also make use of cup for pricing this transaction GP1 to GPH as well as which one? Independent parties as well as
GP2 to independent.
GP2 to independent. Yes. GP2 independent is actually not selling. It's not mentioned. It's selling. Independent is selling. It is selling.
Okay.
It's GP2. So you can make use of this. You can make use of this transaction. This transaction pricing with this transaction. Fine. Here you don't have an independent. You don't have an internal comparable for selling because it is only licensing. It's not mentioned that it is selling. Fine. So great going. So these are the transactions. These are the transactions that you can price using cup. Any other transaction? I don't think so.
Sir, in Aram's answer, though I prefer cup method, but can I also say that in GP1 scenario, GP1 is selling physical product to GP Headco and third party customer. So internal CPM can also be applied.
Cost plus C. This is the first method that we are discussing. Cup. Ultimately, we will move over to cup, CPM, RPM as well, and TNM as well. Fine. But what you are saying, this is also a case for application of CPM, cost plus, because ultimately what? This is a contract manufacturer, and contract manufacturer ultimately how you would price? You would ultimately take the direct cost of GP1. You will take the indirect cost. You will calculate the cost plus margin, right? You will take the cost plus margin, and accordingly that will be the remuneration for GP1. So cost plus method can also be used for pricing of this in the controlled transaction GP1 to GPH, that is contract manufacturing. You are correct. Don't worry. Clear? Is it fine?
Yes, sir.
So this is the structure. Copy this structure. Definition, use, where the method is used, standard, those two conditions, number one, number two, application to the present case. These are the four components that you should include in every question of TP, which asks you to identify and apply the TP method. Fine. And before this, we have already taken up how you would select that paragraph number 2.2. That is the basic introduction. 2.2 criteria, how you would select. Making sense? This is cup. Now you can simply carry forward the structure for other methods as well. Cup. Now come to second method, second traditional transactional method, cost plus method. Cost plus method, same definition. Cost plus method. Cost plus method is a method which makes use of the cost plus margin for rewarding the tested party. Which is the tested party? The entity which has got a similar functional profile. Use CPM, it's mentioned here in the TP guidelines that cost plus method is used in the case of contract manufacturing entities as well as provision of services. Fine. So use standard, same one too. And uncontrolled transaction is a comparable uncontrolled transaction. An uncontrolled transaction is a comparable transaction for the purposes of CPM if none of the differences between the transactions being compared or between the enterprises undertaking those transactions materially affect the parameter, and the parameter in case of cost plus becomes cost plus margin, or reasonably accurate adjustments can be made to eliminate the material effects of those differences. Standard. Number 4, application. Application, we've already seen that in the transaction between GPH and GP1, GP1 is clearly the tested party. 3.18, 3.19, please mention those paragraphs. GP1 becomes tested party. Tested party, it is manufacturing, and that is why it can be remunerated on the basis of a cost plus margin. Not only this, between this, GP2 is also the tested party, is also contract manufacturer, so it can also be remunerated on the basis of cost plus margin. Fine. As far as internal comparable is concerned, you can make use of this internal comparable. Although internal comparable it is not exactly internal comparable. Can you tell me why this, although independent party is also a contract manufacturer? Everyone, Deepak, Swati as well as Abdul. GPH, independent party is also contract manufacturer. But can you tell me why can't we say that this GPH and independent party can be used as an internal comparable? Any idea?
Sir, because one party needs to be a part of MNE Group.
So the GPH is the common party, na? GPH to GP2, GPH to independent,
Yes.
and GPH to GP1. This is the common party. Still, I am saying you cannot make use of internal comparable. You cannot make use of this. And you won't find this discussion even in model answer. I mean, I'm yet to go through them. But then this is something which is very, very deep. Deepak, any idea why can't we make use of this GPH to independent party as the internal comparable? This is also contract manufacturing. while we make use of internal
But
comparable.
in CPM, we can take it as an internal comparable in contract manufacturing because functions are important rather than product comparability in CPM.
No, but still, internal comparables are used. Internal comparables are used. This would not be an internal comparable, but this can be used as an external comparable. Internal comparable, this one, just compare this transaction, contract manufacturing and then selling, contract manufacturing and then selling. Which is the simpler party? Which is the trusted party? GPH or GP1? Come on.
GP1.
GP1 is the trusted party.
GP1 would be the.
In case of internal comparable, the common party should be the trusted party. Common party should be the simpler party. But in this case, GPH, contract manufacturing, GPH, contract manufacturing. The common party is which? Which is the common party? Common party becomes GPH. Is GPH the simpler party?
No, it's complex.
So that is why this is not an internal comparable. GPH and independent party, this is not an internal comparable, but then this can be used as an external comparable. Fine, because ultimately with respect to each other, independent party and GPH, they become independent parties. So you can use this transaction, and for that, because ultimately same product is being transacted, you can use this transaction and you can price this transaction as an external comparable. For this, you don't require, because you already have an internal comparable. Is this concept clear? Deepak and Abdul and Swati? Rajat, you will take some time. This is a bit involved.
Yes, sir.
For external comparable, there should be two independent parties.
Fine. So independent party here and GPH, these two are independent parties with respect to each other.
Correct.
And as far as trusted party is concerned, this is not a trusted party, right? This would have been a trusted party, right, Abdul?
Right.
So for the control, I'm repeating, for the control transaction GPH and GP2, you can make use of, and for the method cost plus method, you can make use of GPH and independent party as the external comparable. Why? Because tested party is not common. So as far as that issue was concerned, that is gone, and independent party and GPH are both independent with respect to each other. Fine. If this would have been the tested party, then it would have become an internal comparable like this. But because this is not the tested party, that is why it is an external comparable. GPH independent party is an external comparable for GPH GP2 control transaction. Is it clear?
Yes, sir.
Yes, sir.
Fine. So this takes care of CPM. Come to third method. Third method is what? Resale price method. Definition: resale price method, resale price margin, FFD, LRD. Resale price margin takes case. Resale price margin is what? Resale price margin is what? OPEX, operating expenditure, plus a reasonable amount of profit. Fine. And resale price margin you arrive at, you deduct resale price. What was that equation? FFD, LRD. This is the resale price, Z. This is the arm's length price, ALP, and this is the resale price margin. Fine. So ALP plus the resale price margin is equal to the resale price Z. So resale price minus the resale price margin will give you the arm's length price. Remember? Fine. So mention that definition here. Resale price margin, the concept of resale price margin. Use same two conditions. Fine. Use of a comparable transaction will be an uncontrolled transaction for the purpose of resale price margin if 1 and 2. Fine. Standard. Okay, then use is resale price margin is used in cases wherein you have distribution function. Tested party is a distributor, lower risk distributor, LRD. Fine. Standard. An uncontrolled transaction will be a comparable uncontrolled transaction for the purposes of resale price margin if none of the differences between the transactions being compared or between the enterprises undertaking those transactions materially affects the resale price margin, or if reasonably accurate adjustments can be made to eliminate the effects of those differences. Standard application. Where in this diagram you can apply RPM? Please tell me. Resale price margin.
There is no case to apply RPM.
Okay, let us see. Resale price margin. Okay. Resale price margin. Resale price margin. Resale price margin. Okay. On this transaction, although in case of CPM we had focused upon the manufacturing function. Now because it is also selling, so manufacturing was one and then selling was another. Selling function can be remunerated with the help of resale price margin. So if you focus upon the selling function, it would be manufacturing, and then it would be selling. So if you focus upon the selling part, then I think you can apply RPM here as well. This becomes internal comparable. Selling function, the remuneration for selling, and then it is also selling to GPH. But then in this case, you will have to assume that the risks for the product are ultimately being borne by GPH. Because it is manufacturing, that is fine, it is being remunerated, and then it will be further remunerated on the basis of the resale function that it performs. So reselling is there, I think you can apply resale price margin to this transaction as well, selling. Apart from this, GPH, GP2, selling, okay, royalty, it also sells, GP2 sells. GP2 also sells, no? GP2 also sells the goods to GPH. So, with some assumptions, you can apply RPM here as well, GP2, wherever you find resale function. Obviously, with certain assumptions that in this case you are remunerating, you are focusing upon the reselling function. Fine. In addition to this, that's it. Two transactions, this and this. Internal comparable here, and then here and again external comparable. Yes. Is it clear? With certain assumptions, you can apply resale price margin to this transaction as well as to this transaction. Clear? Abdul Deepak Sati.
Sir, in GP1 and GP2 both are performing contract manufacturing functions. So reliability to apply GPM is less.
Reliability of applying which method?
RPM.
You know what? In this case, we are sort of.
We have characterized as contract manufacturer.
That is true.
For analysis.
That is absolutely true. I am fully agreeing with what you are saying, even the issue that you are mentioning, the issue of reliability, that is also agreed to, well taken. But in this case, you know what? We are not ultimately, when you would be making a TP documentation or TP analysis, you would be focusing upon only one method. You will not carry out such an analysis for all the methods, and that is not required. That's very, very clearly mentioned in chapter number 3, comparability analysis. As far as this question is concerned, we are simply looking at the possibility of application of different methods. That is all. That is absolutely true. I am fully agreeing with what you are saying, and even the issue that you are mentioning, the issue of reliability, that is also agreed to, well taken. But in this case, you know what? We are not ultimately, when you would be making a TP documentation or TP analysis, you would be focusing upon only one method. You will not carry out such an analysis for all the methods, and that is not required. That's very, very clearly mentioned in chapter number 3, comparability analysis. As far as this question is concerned, we are simply looking at the possibility of application of different methods. Obviously, because if you find that the major function it performs is that of contract manufacturing, but then also you cannot deny this fact that it is also undertaking a selling function. So if its selling is involved, then yes, with some reservation, obviously with certain amount of lesser reliability compared to the application of CPM, you might apply, you can apply. This is my sole point. I'm not saying that this would be better than the cost plus method. I'm simply saying that you can apply. Deepak, clear?
Yes, sir.
See, TP, I told you there is no right, there is no wrong answer. More the number of issues you are able to create in your answer, na, nobody will say that it is right or wrong unless something blatant happens. But more the number of issues you are able to you are able to elicit, you are able to bring into your answer, the better decorated your answer will be, and better marks you will fetch for yourself. This is my sole point. Fine. Cup, CPM, RPM, even TNM.
So shouldn't we also write like traditional? First, we have to like look into the traditional transaction method and then the transactional profit methods.
You might, because ultimately this is the sequence that we are following. We've completed the traditional transactional methods, starting with cup, then cup, then RPM, CPM, RPM, and then we are moving over to transaction profit methods, TNM. PSM will click. In this case, because ultimately TNM can be applied. TNM is what? TNM you focus upon net operating profits. You know what? In this structure, write one more point. Although I mentioned that in the form of cup, that cup requires, remember, cup focuses too much upon the product comparability. For CPM and RPM, remember I told you that CPM, RPM, they focus upon functional comparability, similarity of functions. Remember? Yes or no? Come on.
Yes, sir.
Just mention this point as well, that CPM and RPM, they focus upon similarity of functions. Fine. And for TNM, now you can say that if you don't have product comparability, if you don't have similarity of function, then ultimately you will end up on TNM. So this will become a sequence. Fine. So TNM, same definition. TNM, a traditional transaction method. It solves otherwise unsolvable transfer pricing problem. It makes use of net profit indicators. Net profit indicators are what also known as PLIs, profit level indicators. Numerator upon denominator. Numerator is what? Numerator is net operating profit. Denominator is what? Denominator is either cost or asset or sale. And the denominator indicates the value of the function that is performed by the tested party. Fine. Similarly, you can make use, you have GP1 and GPH. GP1 and GPH you have priced using cost plus method. You can also make use of TNMM, and the parameter that you will make use of is what? Net operating profit in this transaction upon what? Cost. Because in this case the relevant parameter would be cost. Why? Because for GP1, which is the tested party, cost indicates the value of the function performed. Why? Because it is the cost, because it is the contract manufacturer. So you can apply TNMM, that is PLI, that is ROC, net operating profit upon cost, that is return on cost for this transaction as well as for this transaction. Is this discussion regarding the applicability of TNMM clear to all of you? Please.
Yes.
Right? You can apply TNMM, summarizing, you can apply TNMM on the same transactions on which you were applying cost plus method. That is GPH and GP1 contract manufacturing, GPH and GP2 contract manufacturing. So, is it clear? Everyone? Oh my god, it's 11:20. Is it clear?
Yes, sir.
Yes, sir.
So this completes your First question 25 marks, and remember we've taken so much of time. But if you write this much, na, you will get 30 out of 25. In my guarantee. Right? So this is your first question. Tomorrow we'll take up the second question and then the subsequent ones. Fine. Swati's answer, is it always IP owner will be performing IP management services also? Swati, it is not always that IP owner performs IP management services. Actually that depends upon the fact pattern. Ideally speaking, it should be given to you while you undertake actual delineation of the controlled transactions between the two entities. For example, between GPH and GP1, GPH and GP2. When you will undertake a fire analysis, obviously facts are not given to us in such a detailed manner. But when you actually undertake fact pattern in the actual case, you will find which of the entities performing IP management services, and that you would undertake. You would unearth this. Fine. Okay. Ideally speaking, yes. If this owner, if GP2 is the owner, legal owner, and if he is performing IP management services would include, or rather, IP management services would be encompassed within your favorite phrase, and your favorite phrase is what? DEMP. So development, enhancement, maintenance, production, exploitation. This includes IP management. So if we find that GP2 is performing IP management services, DEMP function, then obviously he'll be entitled to bulk of the remuneration arising out of exploitation of the intangibles. Fine. So this should be given to you in the question whether it is performing or not. I assumed in this case that although majority of the DEMP, because R&D is being performed by GPH, I assumed that DEMP is being performed by GPH. But because it is a legal owner, I simply said that patent management services, IP management service, simply prosecution, etc., will be taken care of by GP2. And in all probabilities, this would be the case. Because the basic rationale of centralizing the IP functions in one entity is that IP prosecution, etc., management, portfolio management, this facility will be taken care of by GP2. I believe this should make things much more clear to you. Fine. So I think we should end here, and tomorrow we'll begin from this point. Is it clear? Everyone?
Yes, sir. Okay.
Right? Take care, and tomorrow we'll meet at the same time. I thoroughly enjoyed myself today. I mean, yes, but I thoroughly enjoyed myself. Perfect. But this is where you see. This is where you see that this is, you know what, this is one question first part. And so many, you've applied chapter number 1, accurate delineation, fire analysis, chapter number 1, comparability factors. You've applied portion of chapter number 6. You apply chapter number 2, you apply chapter number 3, comparative analysis, and tomorrow you will see the second question is actually business restructuring, chapter number 5. So by the time you are completing question number 1, question number 2, you actually done, you would have understood and applied the entire TP. Great. So see you tomorrow. Bye bye. Good night. Take care.
Good night.
Good night. Take care.